All right, listen up.
You can do more than just hear us. You can also watch us on the video feed.
Do it live
at NBC1260.com.
And welcome back to Beyond the Curve, providing strategic insights on international business and international law. I'm Jeffrey O'Brien, alongside Dr. Adriana Sanford. We're going to talk about tax evasion now. Now, tax implications of business decisions are carefully analyzed with a goal of minimizing tax liability. Let's discuss the challenges in the international arena.
Yes, Jeffrey, there is a difference between minimizing tax liability and actually evading taxes. Regardless of culture or education, most entities will choose an option in which they will incur the least tax liability.
Well, nobody wants to pay more than they have to, and they're going to use every rule they can to try to make sure that they're saving money for their company, right?
Absolutely, and that's a good thing. However, sometimes foreign subsidiaries can choose tax strategies that are actually too aggressive. And this can pose a real problem, a real challenge for a U.S. multinational. An example of this was the 2007 case of the tax raid in Brazil. The Brazilian operations of Cisco Systems were raided. It was considered one of the largest tax evasion probes against a U.S. multinational in the country. It involved 650 federal police and tax agents.
Wow.
And can you imagine being one of those employees and having all of a sudden the authorities come through the facility?
That's why I make sure my office is by a door so I can get out the back, just in case. I'm not expecting any trouble, but that's why I sit by a door.
Well, in this particular case, the police came in, they had 93 search warrants, and it was pretty bad. The Brazilian authorities actually requested the assistance of the U.S. government to issue arrest warrants for some of the senior executives in the United States as well.
Well, that's like a plastic man, long arm of the law stretching out there, and I can't imagine that you could be working for a company that is out internationally and you could turn a blind eye to something like that when they can come to your front step in California and just arrest you.
Well, this is what's so important. A lot of times now things are changing and a lot more companies are starting to really focus on what's going on with minimizing tax liability in foreign countries, because now countries, especially like Brazil, are really stepping up. There's a zero tolerance for tax evasion. You've
got to be aware of what your subsidiaries are doing because, like you said, they could show up right in your front door. You don't want that.
Right. It's a challenge. And a lot of these companies that are now going overseas are realizing that there are unique risks associated with conducting business overseas. And sometimes these can pose new challenges. But if you turn a blind eye, the ramifications for noncompliance can be very, very costly. Another example of the costs associated with this would be the case of Daslu. I don't know if you remember the raid.
That's the company that Desi Arnaz and Lucy Ricardo had that did I Love Lucy, right?
No.
I'm sorry. That's Desilu. This is Daslu. What's that?
This is Daslu. Daslu is one of the biggest stores in Latin America for high-end consumption. They had 120 designer boutiques. It was a very posh, multi-brand department store.
It was like a Barney's or a Dillard's here.
Even, I would say...
Even bigger?
Even bigger.
Okay.
In this particular case, the police officers arrived with machine guns and raided 4 of the facilities. And
because that's what's in this year. Machine guns on your arm.
Well, and imagine being a customer and all of a sudden,
the federales are all over the place, and you got guys in masks and badges being flashed around. That is not good for business.
Right. They arrested the owner. She was arrested on suspicion of tax evasion and accounting manipulations. It was a full-blown raid. They had over 300 police and federal tax agents that fanned across.
And they did this while the store was in operation.
Right.
They came through the stores with customers there and all. Right. And in their corporate headquarters, all the same.
Right. The result of this is the owner actually is serving jail time right now. She has 93 years in jail time.
I know if you're an employee in a company where this is going on, you're going to be struggling with the ethical challenges when you see what's going on. It's got to put you in a tough spot.
Yes, it is a tough spot. And as an employee, you have to realize that the consequences can be more devastating if you don't speak up, because the problems and the consequences of tax evasion schemes can really destroy the company itself. It can destroy the legitimate business. If we're talking about an international company, you all of a sudden have your international reputation is in the spotlight. And if you're doing business in, let's say Nicaragua and in France and in Japan, and you've got issues in one country, all of a sudden you're in the spotlight internationally, and the other countries are going to be taking a look at you.
Right.
And there's a closer scrutiny for additional corruption scandals. So as an employee, it is obviously difficult to stand up, but you have to do something. Otherwise, it can be worse.
Nobody wants to lose their job for being the person who speaks up and says, hey, some hinky is going on here. But you also don't want the job you're working at to disappear because you didn't stand up and protect the company as well.
Or you may end up being arrested yourself.
Yeah, nobody wants that.
Tax evasion schemes are serious breaches of public trust. The benefits of having a good compliance program is something that every company now needs.
You speaking up will help protect yourself from ever going off to jail, but also helps protect the company as well.
Right. And we always talk about the significant impact, the beneficial impact of companies coming into local communities. What we have to realize is it also means large-scale unemployment in those communities where the industries were previously located if corporate corruption is not addressed.
If you go in these places and you invest all this money and you start your business up and you don't play by the local rules, you have just wasted a whole bunch of money and you're going to be in a lot of trouble.
That's right.
And you've damaged your brand to go along with it and damaged it in other countries.
Mm-hmm. Today, one of the biggest concerns for companies is corporate corruption. And not that they're involved in it, but they're concerned that somehow it may at some point touch their company. And this is a good thing. This is a good thing, but it shows you how serious this is, and really it's rampant in certain regions. And it's a scary thought.
Open your eyes, follow the rules, be proactive in what your subsidiaries are doing overseas. We've got to take a break. Coming up, we're going to talk about something that doesn't affect just big business. It affects everybody. We're going to talk about cybercrime. More Beyond the Curve, providing strategic insights on international business and international law. We'll be back with more after this.
NBC 1260.